This is Asia Trade. I'm Shery in Tokyo.
And I'm Paul Allen in Sydney. The top stories this hour. Asian markets set for a cautious open, even as fears of a wider conflict between Israel and Iran ease. President Trump says Iran should have signed a deal earlier after Tehran signals it wants to start de-escalation talks. But Israel vowing to continue its strikes against Tehran's missile and nuclear program regardless of any negotiations involving the US. Sources say Washington's also refusing to back a G7 proposal urging Israel and Iran to de-escalate.
Take a look at how U.S. futures are trading early in the Asia session. We are seeing the downside pressure with Nasdaq 100 futures down 0.4%. We continue to see oil rebounding after falling in the overnight Wall Street session as we got comments from President Trump that Iran is seeking to de-escalate tensions with Israel. Still in the Asian session, we are seeing those highs again for WTI, not to mention that gold prices are also trading around record highs. And of course, a lot to do also with the volatility that we're seeing in the Treasury space as we continue to see that section under pressure. We'll be watching JGB yields in Japan session as well. Take a look at how Asian assets are setting up because we're following the Japanese yen, which weakened a little bit in the overnight session. A very interesting turnaround for the Japanese yen, which spiked with safe haven demand on Friday after Israel started those airstrikes against Iran. Sort of a similar scenario that we've seen unfold in 2022 when Russia invaded Ukraine. Spike and then weaken against the U.S. dollar. We're seeing right now holding steady at that 144 level as we get to the BOJ policy decision today. No change expected in the rate, but we're watching the JGB's tapering plan for next year because of that volatility that I mentioned in the bond space. When it comes to the offshore yuan holding steady, we had a little bit of support, Paul, because we got some more positive data when it comes to retail sales in China.
Well, President Trump is calling on everyone to evacuate Tehran. In a Truth Social post, he also said Iran should have signed a deal earlier. He called on Tehran to de-escalate the conflict with Israel as Mideast tensions threaten to overshadow trade talks at the G7 leaders summit in Canada.
I gave Iran 60 days, and they said no. And the 61st, you saw what happened. Day 61. So I'm in constant touch. And as I've been saying, I think a deal will be signed or something will happen, but a deal will be signed. And I think Iran is foolish not to sign one.
Let's get to Bloomberg correspondent David Gura, who joins us now in Banff, Alberta. David, never mind the practicalities of evacuating a city of 17 million people with some of the worst traffic on the planet. Is there any motivation among the G7 to broker an end to this conflict?
Well, that post on Truth Social from the president came out just after he appeared in front of reporters with Keir Starmer, the Prime Minister of the United Kingdom. So he's certainly ratcheting it up. And as you mentioned, Paul, just a few moments ago, over the course of the last 24 hours, there had been this concerted effort by other members of the G7 to come together and try to issue a statement to both Israel and Iran, calling on them to de-escalate. President Trump decided not to sign that, and when he was commenting on that in that meeting with Keir Starmer, he said that the reason for doing that was he still thinks that diplomacy is the best way forward here. He talked about deal-making in this kind of crucible of crisis. We have yet to see sort of what happens as a result of that. The draft document that he pulled out of has been circulated widely, and we'll see if the other members of the G7 codify it. But it's emblematic of the moment we're in where in the past there would be a kind of wide-ranging communique signed by all of these allies together. There was a recognition going into this event that it was unlikely that the U.S. would agree on a lot of those issues. So what Mark Carney, the Prime Minister of Canada, endeavored to do here going into this summit was to kind of do this issue by issue and allow certain countries to sign on to some documents and not others. This here, a very clear example of one in which the U.S. decided not to participate.
David, we're getting the latest lines from the Japanese Prime Minister speaking right now after that meeting with President Trump for about 30 minutes, saying that no package of a trade agreement was achieved at this point. And this, of course, as we had some questions, we had heard that that meeting had taken place, but we hadn't gotten the details yet. I guess when it comes to the Japanese front, we're not getting any progress so far.
Not any progress, and as you know, that was a meeting that the Prime Minister really wanted to happen, talked a lot about, and it happened on the sidelines here of the summit. I don't know if we can consider it an official or a formal bilateral meeting here at the summit, but they discussed trade, and of course, going into this meeting before the conflict in the Middle East erupted, it was the expectation that President Trump was going to play this role as deal maker on the sidelines of this summit in those bilateral meetings. Of course, the circumstances in the Middle East have overshadowed that. There's a lot of focus now on geopolitics, perhaps a little less on geoeconomics. But what you had there with the UK and the US was something the White House wants to hold up as an example of a country, a trading partner coming forward and trying to find a path forward for that nation and the US. Now, we should say the document that those two nations signed today is really just a codified version of what they agreed to in the Oval Office a couple of weeks ago. Nothing new or novel was added to it, but the White House, again, keen to hold that up as something these other nations could look forward to. And as you both know, this is a moment at which the clock is really ticking. There is this pause in place on so many of these tariffs plans on this trade war, that due to expire on July 9th for many of these nations. So there's an urgency in the backdrop fueling all of this. I think that is something that you see there in the conversations that took place between the Japanese and the U.S., but there are so many other world leaders who are here feeling that same sort of pressure.
Yeah, the Prime Minister is saying that it's hard to say when a trade deal with the United States might be reached, that they haven't reached an overall agreement on the trade package yet. But this is on the Japan side. We have seen some progress when it comes to the UK, with the exception perhaps of steel.
Yeah, with the exception of steel, and sort of that has been reduced, but not to the degree to which the United Kingdom wanted to see it reduced. We also heard from the Prime Minister of Canada in a readout of the conversation that he had with President Trump today that there's been progress on those trade talks. That was the first bilateral meeting that President Trump had here at the G7 summit with Canada, and he brought his entire economic team with him. So we had the likes of the U.S. Trade Representative, Jamieson Greer, the Treasury Secretary was there as well. And the message that we got from the Canadian side out of that meeting was they feel like they're on the right track. They're making progress toward a trade negotiation, but nothing substantial to announce at this point. And again, in that readout from Prime Minister Mark Carney, the expectation or the framework that they decided on was they're going to try to make a deal happen here over the next 30 days. So a kind of optimistic tone that we got from the Canadians as they, again, try to pursue this deal. But you listen to those two leaders, and it was President Trump who drew the contrast. He called himself fundamentally a tariffs person, as he said before, and said that Mark Carney is somebody who believes in a different kind of economics, a more complex kind of economics. There so clearly is still here a real fundamental disagreement between these two sides, and that has to be brooked here before there can be any kind of deal.
All right, Bloomberg correspondent David Gura there in Banff, Alberta, Canada. Well, Israel says it will continue its military operations against Iran's missile and nuclear programs, regardless of any potential negotiations involving the US. So for more on this, let's get to Bloomberg's Michael Heath. So, Michael, what's the latest? Iran seems to be interested in de-escalation, Israel less so.
Yeah, I mean, Israel has basically said that it's going to keep attacking until it achieves its goals. Now, it didn't say what those goals were. We had an interview with Ron Dermer, who's a minister in the government and obviously very, very close to Prime Minister Benjamin Netanyahu. He wouldn't say how long the operations would continue, but he did say they're ahead of schedule. In other words, they're doing pretty well in targeting what they want and what they're after, and we've sort of still seen that they've basically got air control over the country. And just an interesting aside too, that Iran had this ring of fire around Israel, Hezbollah, and these other places, these other groups, and we've seen absolutely nothing from Hezbollah, which suggests they've been completely taken out of the picture. And Israel seems very determined to try to do something along those lines. Obviously, given the distance between the two countries, it can't be quite as thorough as that. But it really does seem to be determined to set Iran back a long way. And Dermer mentioned setting it back years, where most people have said that the most Israel could do was set back the nuclear program, months or perhaps 1 year. So very interesting comments there. But at this stage, for whatever talks there are about perhaps de-escalating or finding some sort of agreement, Israel will pursue its interests at this stage. Pursue its operational targets at this stage, and doesn't look like it's going to stop.
President Trump warning Tehran to evacuate. What does that signal about U.S. involvement in this conflict going forward?
Yeah, Shery, well, look, I mean, the US is involved at this stage already, but it's mainly to do with the defence of Israel. I mean, they've moved they've moved naval hardware in there that will help intercept missiles, and basically Iran has been firing missiles on Israel, and I think the latest number is 24 people have been killed in Israel. But at this stage, the US isn't there's no real suggestion that the US is going to join with Israel, even though Israel has said it would welcome this, and that what it's doing is in the US's interests as well. As Paul sort of mentioned earlier, the notion of evacuating Tehran is kind of bordering on the absurd, given just how many people. It's like a small country, that city, and very difficult to do. But we did see that Israel ordered one section, a district of the city, to evacuate, because I guess it was near a target. So Israel does make an attempt to minimise civilian casualties. It's often heavily criticised about this, but considering the wars it wages, it does try to do the right thing there. So I think you'd probably be more listening to what Israel has to say rather than what President Trump does in terms of strike sites. But at this stage, it doesn't look like the US is going to join in the conflict. Trump wants to be the one who signs an agreement with Iran to sort of end this notion of Iran getting a nuclear weapon, and Israel is sort of the hammer in a way that's doing the other side of it, the sort of aggressive side of it for him.
All right.
Yeah, Bloomberg's Michael Heath there joining us with the latest on the geopolitical tensions ongoing in the Middle East, and that's really affected market sentiment across the board. We had some calm overnight coming from global markets. We are now seeing the pressure on U.S. futures, and of course, we were watching oil prices very closely. We had a little bit of a fall in the overnight session, but again, we're seeing that rebound in the Asian session, and you can see S&P futures at the moment down 0.3%. Let's discuss the market opens in Asia with our executive editor for Asia Markets, Paul Dobson, who joins me in the Tokyo studio. Welcome. And what a day to be with us, because we're seeing this really reversal of risk sentiment just on those comments coming from President Trump.
Yeah, a little bit of a jolt when things had seemed to stabilize a little bit in financial markets. So as you were saying, we have US stock index futures down a little bit, crude oil up a little bit, and gold also rallying to a certain extent. I mean, the moves are not humongous at this time of day. But it's certainly injected a little bit more uncertainty back into the market, the comments from President Trump, because they're so nebulous, right? It's very difficult to know exactly what he means or what he's trying to imply by saying this, and so the markets will react. So on the whole, I would say that considering the conflict and the escalation that we've seen, even over the weekend, markets have been taking this remarkably calmly and in stride. We did see that sign of stabilization in yesterday's trading, and so on the whole, people have plenty of other things to worry about this week, not least the BOJ coming up today, and then the Fed later in the week as well.
Yeah, the Bank of Japan kind of been shoved down the news agenda a little bit, Paul. We are expecting a hold, though, but what might we hear about the tapering of bond purchases?
Yeah, so I think that there's a couple of really interesting things for markets to focus on, which target different parts of the yield curve in Japan. There's a lot of interest because there has been a significant lack of demand for longest maturity bonds, for those in the 20-year to 40-year bucket. And we've seen that in auctions that haven't been so successful. And so the market is now hoping that the BOJ is going to think about that when it calibrates how quickly it's going to slow down its purchases of government bonds going forwards. And so what the market is, or the majority of participants are expecting, is that the BOJ will tell us that they're going to ease off on the sort of pace of tapering, as it's referred to in the market, so how quickly they're going to whittle down those purchases. I think it's interesting that while the majority is looking for that, not everybody is looking for that. And I feel that the market has already priced that in to quite a firm extent. So if we do see the BOJ kind of sticking to its guns and not changing its view at this point, that could provoke further volatility at the back end of the yield curve in particular.
And we have already seen really foreign holders talk about JGBs as being really interesting at this point. PIMCO watching the 30-year JGBs. What does this signal for global debt markets? Because we have seen Bloomberg analysis that perhaps treasuries are now more closely tracking what's happening here in Tokyo.
Yeah, that's right, Shery. I think that, precisely that. They're starting to have an outsized impact almost on trading of global bonds because for so long JGBs were the lowest yield securities, safe securities anywhere in the world. And that sort of set an anchor, as it were, for the rest of global markets. And as we've seen those yields start to lift with the rate hikes and the sort of slowdown in the bond purchases, so that started to destabilize the rest of global markets as well, because people are looking at relative value. And if your JGB rate is suddenly 1 percentage point higher, then maybe you're going to factor that into where you think that the value is in US Treasuries, particularly as people can move their money between the different jurisdictions, and the yen is strengthening, which gives Japanese government bonds an extra reason to be a little bit more appealing at this time. So the more volatility we're seeing in Japanese markets at the moment, the more that's starting to correlate with global markets, and the more that that's starting to have repercussions all the way around the world in the key markets, the Treasuries markets, the gilts and the bonds as well.
Paul Dobson, really good to have you here in the Tokyo studio today, Executive Editor for Asia Markets, of course, as we continue to follow the gyrations ahead of the BOJ policy decision later today. Coming up on the Asia trade, we speak with Middle East expert Roger Shanahan about Israel's endgame in its conflict with Iran. It's a BOJ, and as I said, it's BOJ decision day, so we do speak about that with JPMorgan Securities Japan. We also are going to take a look at Australia-US trade, as of course their leaders prepare to meet at the G7 summit as well. This is Bloomberg.
Let's take a look at how a few key assets are tracking as this conflict between Israel and Iran begins to enter a fifth day. We've got S&P futures looking a little bit softer. It was a positive day for US stocks. The yen a bit softer as well. Take a look at spot gold. Yes, it's higher at the moment, but it has reversed away from the peak that we saw yesterday. Crude prices continuing to gain, although we do have signs of Iran seeking a de-escalation. No sign of it actually happening at the moment, but so far critical exporting infrastructure in Iran has been spared. Well, let's get a little bit more on the conflict between Iran and Israel. Joining us now is Roger Shanahan, Middle East analyst and author. He was the former director of the Australian Army's Land Warfare Studies Centre as well. Roger, thanks so much for joining us. I just want to start by asking you what you see as the end goal here for Israel. Is it the crippling of Iran's nuclear infrastructure, or is there a bigger issue at play here, the possibility of regime change?
Yeah, listen, that's the $64,000 question, because nobody's quite sure. The initial justification for this campaign was because of an imminent threat of nuclear weaponization on the part of Iran. That runs counter to US intelligence estimates. Israel has publicly said that regime change is not one of the issues that the Security Cabinet discussed, but the range of targets that Israel has selected would indicate that it's much more than simply trying to degrade their nuclear capability. It's much more broader than that, but we don't know exactly how broad.
So we've just had this tweet, well, or a social media post by President Trump urging an evacuation of Tehran. The practicalities of that aside, what are the chances of a popular uprising in Tehran if Israel starts targeting the population instead of just key infrastructure?
Yeah, listen, the one has to be very careful about the way that people, particularly large groups of people, react in your ability to dictate events. There's no doubt that the Iranian regime is deeply unpopular. There's no doubt that the Iranian population is not happy with their economic lot in life. Every presidential and parliamentary election has seen smaller numbers of people turning out to vote because they don't believe that the system is representative. There's deep corruption in the country. But at the same time, people don't normally rise up in the face of external attack from an external actor, particularly if it's from Israel. So if that's the aim, and it's said that it's not, it's unlikely to happen. People in Iran will if they are going to change the government, they're going to do it in their own good time and based on their own circumstances, not those imposed by external actors.
Is Israel's goal here bringing the collapse of the Iranian regime? And then my question would be, is Israel able to achieve this? What course would it have to take in order to get there? Because not achieving this would actually threaten the rise of a more nuclearly powerful Iran.
Yeah, listen, that's the kind of counter-argument to expanding your aims. If there are always doubts about Iran's ambitions as regarding weaponising its nuclear capability, then directly attacking Iran and exhibiting its weakness in its conventional weapons capabilities is likely to have the opposite effect. You know, if you're the Iranian political leaders, you're going to say, well, listen, we're not nuclear capable, we're conventionally weak, perhaps the best form of defence is an undeclared nuclear capability like Israel has, for instance. But certainly the medium-term aims, it would appear from Israel, is a further weakening of the Iranian regime, certainly its conventional military capabilities, its military leadership, and that's been ongoing since Israel's response to the 7th of October terrorist attack, and we've seen that play out not only obviously in Gaza with Hamas, but in southern Lebanon and southern Beirut with Lebanese Hezbollah, and to a lesser extent the Houthis in Yemen. Iran's external support forces have been degraded, and now this is Israel degrading Iranian political and military capabilities as well.
So we have seen President Trump continue to make comments about the conflict, including he wants the evacuation of Tehran. He thinks that Iran wants to talk. What are the signals of how involved the U.S. is at this point?
Yeah, listen, the US is involved in a defensive capability at the moment in terms of assistance to Israeli air defense against Iranian attacks. There is no doubt be logistics and intelligence support going on in the background that doesn't hit the headlines, but that happens most days of the week. The issue is, does President Trump, who has tried to pride himself on staying out of conflict, want to be part of this conflict? And most commentators would say at the moment there's no real need for the US to become engaged in an offensive capability, but it's happy for Israel to do the offensive capability so that they can get them back to the negotiating table.
Roger, really good to have you with us. Roger Shanahan, Middle East analyst and author. We'll have more on the Asia trade. This is Bloomberg. U.S. futures under pressure after President Trump told Tehran to evacuate. We were seeing NASDAQ 100 futures down 0.3%. After we saw some calm on global markets overnight, oil prices also rebounding slightly. Not a lot of movement in the FX side of things. This is Bloomberg. Right, we're getting breaking news out of the White House that President Trump will be returning to Washington tonight. Of course, the G7 continues as we have seen leaders trying to negotiate deals with the president. We know that they are not necessarily preparing a joint communique. We've seen a lot of issues regarding that, especially when it comes to alignment by partners on key geopolitical global trade issues as well. And we know that President Trump is not necessarily a fan of these big international summits. We're now hearing that he'll be returning returning to Washington because of the Middle East crisis. Of course, we know that Iran and Israel continue to escalate conflict. We have heard from President Trump telling Tehran to evacuate. When it comes to the trade side of things, we have just seen the end of a conversation with Japanese Prime Minister Shigeru Ishiba. He's now saying that there is no deal yet with President Trump. Ishiba saying the talks are ongoing and saying that Japan is seeking to protect the nation's auto industries. For more, let's bring in Bloomberg's Yoshiaki Nohara. Yoshiaki, so we didn't necessarily get many details of what happened during that 30-minute conversation, but what do you know so far?
Well, what we know is that the negotiations will continue as they have been at this point, and there's no deal. But we know that there's been a lot of expectations that some kind of agreement could be reached on the sidelines of G7. So I would say it's fair to say this is a little bit disappointing outcome for Japan's side.
Yeah, how badly does Prime Minister Ishiba need a win here with upper house elections barely a month away, and does what he got today qualify as a win?
Well, thank you. That's a good question, Paul. It's happening, the stalemate is happening not really at a good time for Japan. The economy is maybe heading into a technical recession, partly because of the impact of the tariffs, and also Prime Minister Ishiba is preparing for a national election just in July. So having no agreement at this point doesn't sound well for him.
Bloomberg's Yoshiaki Nohara there following the trade negotiations. Of course, nothing achieved so far by Prime Minister Ishiba and President Trump. Take a look at how Japanese assets are setting up today because we're seeing the yen holding steady. Of course, the big BOJ decision is sitting, not necessarily any change expected on rates, but we're watching that review when it comes to JGB purchase tapering because we have seen incredible volatility when it comes to the JGB market. Take a listen to what Finance Minister Katsunobu Kato here in Japan had to say about bond market volatility and who really holds the cards in bringing some stability.
While how to manage interest rate policy is basically under the purview of the Bank of Japan, we, the Finance Ministry, are in a position to issue the bonds and sell them stably. Therefore, the Finance Ministry is responsible for the JGB debt management policy in that sense. Therefore, we are engaging in thoughtful and careful dialogue with the market, and we do decide, for example, the composition of short, medium, or long-term bonds and other matters every year and issue accordingly. The Ministry of Finance will decide these sorts of things and execute accordingly.
Of course, there was a lot of speculation on whether the ministry would be cutting longer-term debt issuance and increasing perhaps shorter-term offerings in order to help with the volatility in the markets. A question right now is what will the BOJ do when it comes to its tapering of bond purchases? Joining us now is Ayako Fujita, Chief Japan Economist at JPMorgan Securities. Ayako, great to have you with us. And the question today, not necessarily about rates, but about what happens to JGB bond purchases. Do you expect any change?
I think actually from longer term perspective, I think actually it's better for BOJ to maintain the pace because that gives us a little bit of more kind of predictability over the long course of the BOJ balance sheet adjustment. But of course, actually there seems to be some skepticism about actually whether or not actually BOJ can really stick on the pace. So of course, actually media has already actually kind of reported that actually there are some actually board members who are actually calling for actually a little bit of reduction of JGB purchase pace. But even if actually BOJ reduces the pace, yet actually the balance sheet adjustment will continue. And with even with the half pace, actually BOJ will probably net run off BOJ actually JGB holdings will be probably about actually 40 to 50 trillion for next year. So that is quite significant actually quantitative tightening coming for next year as well.
Given that the markets are kind of pricing in already the slowdown of the bond purchase reductions to about half, as you said. What's the risk of more volatility in the JGB space and consequently in treasuries markets as well, because it seems global debt markets are moving in tandem these days if the BOJ does not change its plans?
This is more kind of sentiment issue because what BOJ is going to decide actually for next year's actually JGB purchase. So after actually second quarter next year. So it won't affect actually immediate actually supply and demand. And also actually in the process of policy normalization, it is natural for actually long end of the curve to actually rise more. Because actually, the JGB market has been pretty much actually controlled by BOJ under the YCC and QQE, but all the policy is going to reverse actually from here. So it's kind of actually, a little bit of increased market volatility should be expected going forward.
Ayako, where do you see the yields on the 30-year JGB peaking?
I think actually for the short term, actually, of course, actually, probably, I think actually, I expect actually, MIF to adjust actually issuance schedule. So kind of structural kind of supply demand problem will be resolved actually coming months. But, if we think actually, if we look forward actually for relatively longer term, actually, if we think actually, the 2% inflation will be maintained and BOJ policy normalization will continue, then actually question is actually current level of 30 years yield is actually still sufficient actually, in the over the long term. So it's, for actually, 6 months to 1 year term, I think actually, already actually, probably the market will get stabilized. But in the March years ahead, I still think actually the yield will have some potential to go up.
And is there a role for the Ministry of Finance here as well? How likely do you think it is that there might be a change to debt issuance, perhaps skewing supply to the nearer end of the curve?
I think actually, the MF should have been actually adjusted the issuance schedule much earlier than that because, BOJ has already announced actually QT. So, and also actually, over the last 10 years, actually, MIF took advantage of low interest rate environment to extend actually, average maturity of JGB issuance. But since actually the overall actually market environment is shifting, so actually, MIF probably actually need to adjust actually issuance schedule to shorten the duration because 10 years ago, average maturity of JGB actually issuance was around actually 7 years compared to actually current actually 9+ years. So then actually overall, actually the pace, actually, it's not just 1 year actually or kind of immediate issue, but actually for years ahead, actually MF certainly need to adjust the issuance schedule.
Of course, the reason that we're watching these debt markets so closely, not only here in Japan, but globally, is because of these deficit concerns, right? Yeah. And we're headed towards an upper house election here in Japan where these politicians are talking about supporting the economy with more fiscal spending. Give us a little bit of the view of the relationship in Japan's overall debt picture and what really needs to be done to support this economy as well, because we have inflation accelerating, but the economy is still a little bit sluggish.
I think actually clearly actually inflation is actually the biggest actually problem for Japanese economy right now. So because actually consumer sentiment has been dragged because of higher inflation, and it's not just the income actually environment. Actually, household saving ratio has moved up last year, so that tells something actually because the consumer has been freaked out with higher inflation. So containing the inflation is probably the better to actually support the economy overall. So then actually natural consequence of actually containing inflation is higher policy rate rather than actually providing some money to actually people.
What about service inflation? What about the key metrics within the inflationary basket that the BOJ says perhaps we're still not there?
Well, but if you look at the actual contents of inflation, even actually imputed rent inflation is going up. Actually, Tokyo CPI also suggested imputed inflation, which is actually remained actually almost zero for decades, but now it reached to 1.5%. So the kind of actually, I think actually the BOJ's argument of that inflation is just transitory seems to be a little bit weird. Actually, if you look at the all details of inflation, because inflation has already broadened out clearly.
Yeah. Also with core inflation above 2% for more than 3 years. Now, Ayako Fujita, really good to have you with us. Chief Japan economist at JPMorgan Securities. We have plenty more ahead. This is Bloomberg. President Trump's sons are entering the smartphone business with a service plan in shiny hardware as well. The venture called Trump Mobile will use network capabilities from all three major U.S. carriers and offers a golden phone they claim is made in America. But the move really dials up concerns around conflict of interest as the Trump family's business interests expand. For more, Bloomberg editor John Harley joins us now from Washington. What do we know about this venture and how it works with the president being in office right now?
Well, yes, it marks another remarkable event or whatever you want to call it, in this or example of this incredibly laissez-faire attitude that the president has regarding his office, his business adventures, and potential conflicts of interest. This business was unveiled today by his sons, Eric Trump and Donald Trump Jr. at Trump Tower, notably 10 years to the day since their father rode down the escalator to enter politics and join the 2016 campaign. It shows you just how much has changed in Washington since then. Now, they say that the new venture will be made in America as much as possible, and that it will use the network capabilities of carriers like AT&T, like Verizon, like T-Mobile, all of which are regulated by the Federal Communications Commission, whose chair is selected by Donald Trump. So there's a lot of ifs here about how they're going to do this. The very few of any phone manufacturers assemble their devices in this country.
John, can you remind us, is there any law preventing a president from using the office to enrich themselves and their family?
Presidents, unlike other, like senators say, Congress people, do not have to divest themselves. But this has never been an issue before Donald Trump, a businessman, real estate developer, came to office. Previous presidents were pretty much adhered to unwritten rules about what could and couldn't be done, and they often would put, say, their holdings in a blind trust. Donald Trump did some of that in his first term. This time, no. I mean, this is he's ventured into cryptocurrency, into large real estate deals in other countries that have relations with the United States government, and this is another one, but it presents even more an even deeper thicket of questions about regulation, about conflicts of interest.
All right, Bloomberg editor John Harney in Washington there. Thanks for joining us. Well, Chinese President Xi Jinping is in Kazakhstan for talks with Central Asian leaders. The meeting providing a counterpoint to the G-7 summit, which is happening in Canada. Our China correspondent Min Min Lo joins us in Hong Kong. So, Min Min, the final day in Kazakhstan for President Xi. What's on the agenda and what have been the key takeaways?
Yeah, so President Xi has met with Kazakhstan president, and there are a few of his messages that stood out to me. Number one, he called on the two countries to work together to fight for the common interests of developing nations. So again, here, China is positioning itself as this leader of the developing nations to try to erode what it sees as this U.S.-led international order. But both sides also looking to cooperate on counter-terrorism measures. And this is particularly critical to China's Xinjiang Xinjiang province, which borders on 8 countries, including Kazakhstan. And the third thing he pointed out was about the Belt and Road Initiative and enhancing cooperation in areas like railways, ports, energy. And remember, this region in Central Asia is rich in resources from uranium to oil to rare earths, and that's why it's an area that is the nexus of geopolitical rivalry with, the Italian Prime Minister visiting last month, the European Commission President visiting in April, and just a few days ago, Marco Rubio as well met with the Foreign Minister of Kazakhstan. So just on Monday alone, Chinese and Kazakh companies had signed deals worth about $24 billion. But of course, President Xi also is there to meet with other Central Asian leaders as well in the China Central Asian Summit, just the second time that it's being hosted, the first time being held a couple of years ago in Xi'an.
And maybe it's so important for China to be able to really shore up these partnerships at a time, of course, when we continue to see the growing divergence between Washington and Beijing. And even when it comes to places like R&D and scientific research, what President Trump is doing on those retrenchments in budget cuts in that area is having a big impact on China itself.
Yes, so those budget cuts had impacted the collection and availability of data. And we understand from sources now that China is making preparations for that. Chinese ministries and research institutions are quietly assessing the damage or their reliance on U.S. data, how that would impact their own activities, and to what extent they will be able to replace with their own domestic data. And these are data that range in areas from covering areas like climate change, astrology, and public health. And so this is something that, yet another aspect of U.S.-China relations that is fraying. And it's an area where there has been some level of goodwill over the years. Both sides have a history of collaborating in scientific research, and Chinese researchers have often praised the comprehensive coverage and accuracy of U.S. data. And one area, one project in particular that could be affected, according to sources, is the research on coral reef bleaching in the South China Sea, which relies on U.S. data on coastal temperature. And the budget cuts had caused that data set to be decommissioned now as well.
All right, Bloomberg's China correspondent Min Min Lo there. We have more ahead on the Asia trade. This is Bloomberg. Let's get the latest now from the corporate front. American Express teased updates to its travel-focused Platinum credit cards, calling it the company's largest investment ever. The updates will apply to both the US consumer and business Platinum cards, but no specifics on the changes have been provided. Amex has faced intensifying competition for premium credit card customers since it raised its annual fee in 2021. Chow Tai-Fook is said to have increased the size of its convertible bond sale to about $1 billion, making it potentially one of Hong Kong's biggest this year. Proceeds will be used for the jewellery business and general working capital as the company works to lift its image to that of a premium brand. The offering also comes as New World Development, which is controlled by the same family, grapples with about $26 billion in debt. SoftBank is looking to raise up to $4.9 billion through an unregistered overnight block sale of American T-Mobile shares. According to terms of the deal seen by Bloomberg, the firm is offering 21.5 million shares for $224 to $228 each. This is a discount of up to 3% from T-Mobile's Monday closing price and could be the biggest US share sale since February.
And another potential deal that we're watching, Paul, Bloomberg has learned that Mitsubishi is in advanced talks to buy the assets of the energy firm Aethon for close to $8 billion. This would be the Japanese conglomerate's biggest ever acquisition. For more, let's bring in Steven Sapczynski, who leads our Asia energy coverage. So what do we know about this deal?
Okay, so essentially this is Mitsubishi Corp buying an investor in U.S. shale gas. Shale gas is a really important part of the energy complex in the United States. And what's very interesting about this one in particular is Mitsubishi and the other Japanese trading houses had actually been early investors in U.S. shale over a decade ago. But after oil prices crashed around 2015 and then with COVID, they started to exit it. So they had exited, a lot of companies actually stopped investing in U.S. shale, but Mitsubishi coming in shows a few things. One, it illustrates that the company expects natural gas demand to continue rising, maybe with the AI boom or demand abroad, especially in places like Japan. Mitsubishi exports LNG from the United States to Japan. The second thing also indicates that maybe efforts in the past to boost investments in renewables maybe haven't been as profitable. Gas makes a lot of money, so it's likely they're looking to potentially benefit from investing in gas, which has better margins, is more volatile, can be traded, and they can hit that arbitrage to make more profits. Lastly, Warren Buffett, through Berkshire, is a major investor in the Japanese trading houses, including Mitsubishi, Sumitomo, Mitsui. And it's pretty well known that Warren Buffett is also a very big fan of natural gas. His Berkshire Hathaway owns a stake in an LNG export terminal in the United States. So again, this is probably welcome news to major investors. They understand gas, they know gas, and gas makes a lot of money.
Stephen, how's Mitsubishi going to fund this acquisition? Do we know?
That's still not immediately clear. I mean, the way that these Japanese banks Japanese trading houses work is they can potentially get some debt. They can get the Japanese banks to assist them with this. One other thing to look at as well is, they also have they're quite cash rich. They have capital, so they could look to invest in it. They could also look to potentially get loans. It isn't uncommon when you're making a major energy investment abroad to get things like the Japan Bank for International Cooperation, a quasi-government-owned bank, to assist in this if this is for energy security purposes. If this gas is to be exported to the United States, export from the United States to Japan, then that's something that can be backed by, a government bank and provide financing at low interest rates. So it's not clear exactly how it's going to happen. And I also want to be clear that another bidder could come in. Mitsubishi Corp, it's not a done deal for them. And the ADNOC Bloomberg previously reported that ADNOC was in the mix to try to buy this asset. Mitsubishi is there now. So let's see how it kind of plays out, and then we can decide, or they can decide exactly how the financing will play.
So, Steve, when it comes to LNG, for example, we know that the demand here in Japan has been decreasing. Just quickly, is this deal going to still make sense for Mitsubishi?
So Mitsubishi has a company called Diamond Gas, and Diamond Gas exports LNG around the world. So while Mitsubishi's main market, yes, is Japan, they're looking beyond Japan. They're looking at places like Southeast Asia, India, even China. Really those growth markets. So for Mitsubishi, it's not just about energy security for Japan, it's about capturing the Asia growth LNG market, and they've been able to do that.
Stephen Sepchinsky here joining me in Tokyo. He leads our Asia energy coverage. Of course, we'll be following those stocks that we talked about today. The market opens in Tokyo, Sydney, and Seoul as well. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. The sentiment could be a bit more cautious today, Paul, given that President Trump has now said that Tehran should be evacuated. He's actually left the G7 in Canada early because of the Middle East tensions, according to the White House. And he's missing conversations with the Ukrainian president, not to mention the Mexican president, that would have happened on Tuesday.
Yeah, causing some consternation here in Australia as well, that news, because it was meant to be the first face-to-face meeting between Trump and Prime Minister Anthony Albanese. Plenty to discuss there, including trade, the fate of AUKUS. Well, I guess that conversation's not happening, Shery.
Conversations that did happen with Prime Minister Shigeru Ishiba of Japan. Only 30 minutes, though, and we heard from the Prime Minister that there was no trade package agreement. So we'll continue to watch, of course, those ongoing negotiations, especially when it comes to the car sector, because that's the big deal for Japan, right? 25% tariffs on autos here in Japan could have implications of $19 billion for Japanese car makers. But the big day today, the Bank of Japan decision, of course, not really huge news when it comes to the rate decision. We're not expecting any changes. But what we'll be watching is the BOJ's JGB tapering, bond purchase tapering plan. So the expectation is that they'll actually slow down the reductions of their bond purchases. And the reason is that we have seen a lot of volatility in the long end part of the yields. Super long end, 30-year, 40-year yields have spiked in recent weeks. Of course, we have concerns about global deficits as well. Take a look at the 10-year yield at that 145 level, and the Japanese yen not really doing much at the moment. Take a look at how the Kospi and the Kazakh are trading at the moment, because we also saw new President Lee Jae-myung actually arriving and being at the G7 in those conversations as well. We're going to get that family photo happening anytime now. The Kospi up 0.4%, while the Korean won is weakening against the dollar, Paul.
We've just opened up here in Australia as well. Of course, the staggered open. Be a few minutes before we know how we're really tracking. At the moment, we're a little bit to the upside. Just by about a third of 1 point there. We will be keeping an eye on Santos, of course. Saw that big pop for the oil and gas producer yesterday of almost 11% following the news of the potential $18.7 billion ADNOC takeover. Also watching yields as well, as Shery mentioned there. Bank of Japan day, no change to rates likely, but of course we are watching very closely for commentary around bond purchase tapering because of JGB yields have been rising. We've had seen an impact of the appeal of bonds in other parts of the world as well. So the bond market waiting and seeing on any news from the Bank of Japan. Checking on the oil price as well. Brent is rising again, 74.54. We did see things pulling back a little bit when Iran said it was seeking de-escalation. Israel didn't seem particularly interested in that. But then we had these remarks this morning from President Trump that everyone in Tehran should evacuate. That's all 17 million odd people there. So perhaps he is aware of something. The market certainly reacting in terms of that news. The oil price ticking higher again, Shery.
Paul, let's bring in Kelvin Tai, Regional CIO at UBS Global Wealth Management. Kelvin, I mean, we talked about so many things happening at the same time right now. We're watching the G7, and of course, we have the BOJ, the Fed decision as well. What should investors be focused on that could have long-term implications for global markets?
Well, I think where the BOJ decision is concerned, I think at the moment the situation actually works for them. I mean, the yen is basically hovering at about 145. And as you rightly pointed out, the long end of the curve has actually been pretty stable at about 1.45 as well. And I think basically the Japanese yen, the tariff situation has done for the yen what the BOJ would have wanted the yen to do as well, and that's basically a strengthening from about levels of 140.56, 155 to the current levels of 144. So that in turn actually works because of the fact that they don't really have to actually hike or actually tighten or adjust the pace of tightening, just so that the yen actually has to strengthen. And I do think that they want to keep an eye on the yen as well, in the sense that any further weakening of the yen will probably again bring in issues of imported inflation, which is something that they don't really want at this point in time, with the economy slowing as well. Now, with regards to the Federal Reserve, we don't think that they'll do anything this time around. We do believe that they will basically keep the status situation on hold, and they will only start to actually cut rates in September. And there's reason for them to cut, actually, given the fact that the labour market is actually indeed softening a little bit.
Hey, Kelvin, and you say also in your notes that investors should actually diversify into currencies such as the Japanese yen. Is that also your expectation that we might see more weakness for the U.S. dollar on the other side of that trade? Because what was interesting during all of the spike in geopolitical tensions in the Middle East, we didn't necessarily see that haven flow into the greenback.
Absolutely. I mean, if you look at the 10-year yields, they're basically very steady at about 4.4 to 4.45%. And I think one reason for that is because of the tariff negotiations. We've always maintained that you can't negotiate on the tariffs without talking about the currencies as well. Because if I put 10% tariff on you and you depreciate the currencies by about 10%, we're back to square one. So I think a lot of the countries are aware of that, and they are basically in negotiations with the U.S. Federal Reserve on that, and with the U.S. government on that. And I think the key is that a country can't do that on its own. Right? Because if Korea agrees to an adjustment of its currency and the other countries don't, then that obviously puts the Koreans at a huge disadvantage compared to everybody else. So I think that has to be seen in the light of a currency negotiation across the board. But nonetheless, we are not expecting a Plaza or Louvre Accord kind of agreement. What we are probably looking at is basically for the central banks to actually agree not to intervene in the FX market as often as they should. And therefore, that in turn will likely see an appreciation, especially where the Asian currencies are concerned. Because if you look at the Asian currencies, the tariffs, the average tariff on Asia is actually at about 34%, which is markedly higher than the average of between 15 to 18% for the rest of the world. So I think based on that, we do expect the dollar to actually continue weakening against most Asian currencies, and in fact against most of the G10 currencies as well.
Kelvin, Shery was mentioning havens there. I do want to get your views on gold. I know you have some, particularly in terms of buying when you see a dip, but when prices are this elevated, what qualifies as a dip?
Yeah, I think where gold is concerned, they're likely to remain very, very resilient. I think the best you can basically hope for is to actually get in at below 3,001 at the very most, and I don't even think it's going to get there because all the conditions for gold to outperform are there. Right, you have massive uncertainty right now with the outbreak of the war between Israel and Iran. You have basically central bank buying in very, very big amounts. You have potentially lower rates coming in September, and you have the dollar weakening as well. So I think all these conditions are actually working in favor of gold. And last but not least, you probably have some spike in inflation too next year if the terror situation is not abated.
Are there any assets out there where you're applying the Warren Buffett maxim right now? You know, be greedy when others are fearful.
I think that's going to be hard because of the fact that your U.S. equity markets is basically near an all-time high. But nonetheless, we do think that where the U.S. equities market is concerned, we do think that 6,400 points with regards to the S&P 500 is actually quite achievable. And the reason for that is because the terror situation is not going to be as bad as what we initially thought it would be. In fact, we think that where earnings growth for the S&P is concerned, we do think earnings growth will likely increase by about 4% this year compared to our earlier estimates of basically flat. And the U.S. economy seems to be holding up quite well right now, given the fact that your spending is still there, your consumption levels have actually been holding up. What we're a little bit more concerned with is with regards to the employment market, in the sense that employment has actually been softening a little bit. If you look at the jobless claims, that have actually gone up. And that indicates that people who are unemployed are finding it a little bit more difficult to actually get jobs at the moment. And that in turn could potentially mean that the Federal Reserve will probably have to start cutting rates in September. And we do think that there's room for them to actually cut by at least 50 to 100 basis points in the next 12 months. That in turn should actually keep your S&P 500 actually quite resilient. And that's why we actually have a pretty positive outlook on the S&P. And we do think, again, that it's likely to actually hit about 6,400 points.
How do you feel about Chinese assets when we got some of those retail sales numbers coming in a little bit better than we had expected?
Yeah, that was quite a surprise as well. It was not just a little bit better. It was actually quite pleasantly much better than what we actually expected, which was about 4.9%. We are getting a little bit more positive on China, given the fact that we think that the property market has basically stabilized. I think that's the last catalyst that's needed for the Chinese equities market to actually rally further. The property market might be stabilizing, but we do think that a sustainable recovery is still probably a couple of quarters away, because recently, if you look at the volumes and the prices, they've actually not been on the upside, especially where the sales volumes are concerned. That has actually come back off again. So we do think that where the Chinese property market is concerned, that needs to actually pick up. And I think that will only pick up if the tariff situation with the US is actually resolved. Right now, they're still negotiating, and there is no news on how that is actually developing further. But once that's resolved, I think confidence will gradually come back to the economy. And if that's the case, then that will potentially actually encourage the Chinese to actually start buying. We do know that the Chinese are sitting on a huge amount of deposits in the banks, roughly at about 23 trillion yuan at the moment. So it's not that they are really starved of cash. It's just that they're not deploying that in any meaningful way. Consumption actually happens on the smaller ticket items like your bubble teas, your hot pot restaurants, your movie ticket sales, but they're not really translating into the bigger ticket items. And especially when the subsidies actually run out, then we're likely to see actually a little bit of a tapering off where the consumption of the big ticket items are concerned.
Kelvin, always good to get your thoughts. Regional CIO at UBS Global Wealth Management. We continue to follow the Asian markets, and one stock that we're watching is SoftBank. We are now seeing that it's going to try to sell some of its T-Mobile shares. SoftBank seeking to raise as much as $4.9 billion in an unregistered overnight block sale of T-Mobile U.S. shares, according to terms of the deal that were seen by Bloomberg. Paul.
All right, still to come, we'll take a deeper dive into Australia's trade and defence ties with the United States. We'll be speaking with the American Chamber of Commerce in Australia later this hour. First, though, the latest on tensions between Israel and Iran as President Trump calls on everyone to evacuate Tehran. This is Bloomberg.
The White House says President Trump will return to Washington on Monday evening due to the crisis in the Middle East. Earlier, he called for an evacuation of Tehran on Truth Social and said Iran should have signed a deal earlier. He had called for the country to de-escalate the conflict with Israel as Middle East tensions overshadow trade talks at the G7 Leader Summit in Canada. Let's bring in Bloomberg editor John Herskovich. John, the fact that President Trump is leaving early means he'll miss all of Tuesday's agenda.
Exactly. And the idea that Trump went into the summit with the idea of doing trade deals, but the fact that he's leaving now just indicates that he's going to focus a lot of attention on Iran. It also means that there may be some U.S. involvement, or it raises questions whether there's going to be U.S. involvement in this, what the escalation may be on the part of Israel, if the U.S. will be involved. Just a lot of market uncertainty that's generated from this, from equities to oil, and then there's the geopolitics. What happens next? Leaving early just moves the agenda from trade, which was the focus that Trump entered the G7 with, to this conflict, which is escalating, showing no signs of slowing down, and could even get broader.
John, in terms of the trade side of things, how much progress did President Trump actually make in terms of advancing some deals?
Well, we had some of the key meetings were with Canada's leader, Carney. There was a meeting with Japanese Prime Minister Ishiba, and there was also one with the UK's Starmer. Canada and the US agreed that they could do something in about 30 days. With Japan, there was no real progress. With the UK, there was an agreement to implement what they had already agreed to. So we saw those three things, but in terms of like actual comprehensive trade deals, these are just really tough. They take months, years to negotiate, something that just can't be done in a 30-minute meeting between leaders. So there was some progress, I think, on the part of Japan. The idea is no deal is better than a bad deal, considering the economic interests at stake, automotive industries, Japan's steel sector, and Japan is looking at really hefty tariffs. Canada, also with Carney, he made his reputation for being quite staunchly opposed to Trump. I think he's also going in with the idea that, no deal is better than a bad deal. And Britain has worked hard to get something with Trump, which does help its industries.
All right, Bloomberg editor John Herskovich there. Let's get some more on the situation in the Middle East after Trump's warning on Tehran. Let's bring in Bloomberg's Michael Heath. So we put together what we know, this warning from President Trump, the unwillingness of Israel to de-escalate this conflict. Where could this potentially be heading?
Yeah, I think sort of John just alluded to it there, that the question sort of becomes, is the US perhaps poised to become involved, or has there been some movement in terms of some sort of deal with Iran? We really just have to wait and see how that unfolds. I mean, what we do know is that as you mentioned, that Ron Dermer, the Strategic Affairs Minister in Israel, told Bloomberg that it'd be great if Iran signed a deal, but they've had plenty of time to do that, and Israel is pursuing its operational objectives. He said they're ahead of time, ahead of schedule in terms of what they're doing, and their aim is to retard the nuclear program and try and get rid of Iran's ballistic missile capabilities there as well. The other thing that seems to be going on as well is that there's sort of an attempt to destabilise the regime a bit. I mean, I think there's a real sense in Israel that this is a sort of a unique opening or opportunity, and they're not going to squander it. We saw Prime Minister Netanyahu earlier address the Iranian people. So, yeah, look, there's a lot of balls in the air at the moment, and really, as John mentioned, that this President Trump leaving the G7 early and going back to Washington really sort of changes the agenda, and now everyone's just focused on what's the next move by the US.
And it's not only destabilization of the Iranian regime, right? We're talking about devastation on both sides. What's been the magnitude of the conflict so far?
Yeah, pretty serious, Shery. I mean, there's been the latest numbers that have been reported is 224 people killed in Iran and 24 in Israel, and a lot of it injured in Israel as well. I mean, while Israel's got its own missile defence, and it's got the US as an adjunct to that. With its THAAD system and some naval destroyers there helping too. Iran's missiles are getting through, and they have hit civilians, and obviously in war, and on the Israeli side that's happened as well. Iran says that most of its dead are civilians, and with the best will in the world on either side, in a war where you're firing missiles at even if they are strategic areas, there's bound to be people around. I mean, these are densely populated areas. That we're talking about, and so there's just going to be fallout there. So it's been pretty significant. Iran's obviously taken the brunt of it there because Israel's defence capability is very, very sophisticated. But also Israel has to travel a long way. Its fighter jets have to travel a long way to get to their marks as well. So whereas Iran's mainly using missiles and drones. So there's been significant damage, and with no prospect of a let-up, it seems like that's going to be keeping on going. It's going to get worse from here.
It's also interesting some of what hasn't happened. Oil exporting infrastructure has been largely spared. No blockage of the Strait of Hormuz. What are we to make of that?
Yeah, well, I mean, part of the issue here as well is that Iran had a lot of tension with the Gulf states around there, with Saudi Arabia and the other countries there. They've both sides have made a real effort to improve relations and ties there. So where previously we'd seen the Houthis attack Saudi infrastructure and these sort of things. Now there was a real willingness on both sides, from the Gulf side at least, that the US and Iran find some sort of agreement there to de-escalate tensions. So it's not really in anyone's interest to be blocking up the Straits of Hormuz or whatever. Certainly President Trump doesn't want US gas prices going up. Obviously everybody in the region relies on oil there as well. So it's not really in their interest, and Israel obviously doesn't want to offend the US in any way by jacking up the oil price even further than that market tension is already doing.
Bloomberg's Michael Heath there. Still to come. While the G7 meets in Canada, Chinese President Xi Jinping's in Kazakhstan for talks with leaders of Central Asia. We'll have more on China's push to deepen its influence in the region next. This is Bloomberg.
Chinese President Xi Jinping is in Kazakhstan for talks with Central Asian leaders. The meeting is seen as a counterpoint to the G7 summit happening in Canada. Our China correspondent Mingming Lo joins us now from Hong Kong. So, Mingming, what's topping President Xi's agenda?
Well, President Xi met with the Kazakh president and, of course, again, calling for both countries to fight for the common interests of developing nations. And again, this is something that China has always positioned itself as this leader of the developing nations to erode what it sees as this US-led international order. And President Xi also touted the Belt and Road Initiative, calling for more enhanced cooperation between the two sides on areas like railroads, infrastructure, ports, energy. And again, this is a region where there is a lot of resources, especially in rare earths, uranium, and it's things like this that makes it important, especially against this backdrop of the US-China tech race. And that's why Marco Rubio, the US Secretary of State, also met with the Foreign Minister of Kazakhstan just a few days ago. You have the European Commission President visiting Kazakhstan in April, and the Italian Prime Minister Giorgia Meloni also visiting last month. And President Xi now is on his third overseas trip this year, and he's chosen Central Asia as his destination, his his first 2 trips were in Southeast Asia. The second trip was to Russia. And we really can see that these surrounding areas close to China, they are part of China's top priorities as China tries to build up its alliance amid this tariff war with the United States.
Meanwhile, we've got a situation where Trump's budget cuts on scientific research is prompting China to review its reliance on US data. What are the implications for science and research in China?
Yeah, so the budget cuts on U.S. scientific research has impacted the collection and availability of data that covers things like climate change, public health, astrology. And this is an area where there has been a lot of cooperation between U.S. and China when it comes to scientific cooperation. Both countries signed a treaty back in 1979, and that was just renewed not too long ago. And now the lack of availability of these data is prompting Chinese ministries and research institutes to start to conduct their own assessment of whether they have been over-reliant on U.S. data and to what extent they will be able to replace with their own domestic data. And again, just another aspect of U.S.-China relations that is fraying as a result of Trump's policies, because this is an area where there has been a lot of goodwill. Chinese researchers often praising how U.S. data has been very comprehensive in its coverage and accurate as well. And one of the projects that could be affected is the research in coral reef bleaching in the South China Sea, which relies on coastal temperature data provided by the U.S., but that has been decommissioned as a result of Trump's policies as well.
All right, Bloomberg's China correspondent Min Lo there. Some of the other stories that we're following. U.S. Senate Republicans have drafted a new version of President Trump's signature economic package. The bill expands some tax breaks, raises the debt ceiling by $5 trillion, and makes permanent 3 business tax breaks that were set to expire after 2029. The plan comes at the expense of curbing health coverage for some low-income Americans and makes no mention of a deal on state and local tax deduction. President Trump has directed federal officials to expand efforts to deport migrants in the largest U.S. cities, including Los Angeles, Chicago, and New York. The move comes after protests erupted in hundreds of U.S. cities over his anti-immigration efforts. Trump campaigned on carrying out the largest deportation in U.S. history and has moved to deliver on that agenda, with immigration officers saying they're arresting 2,000 undocumented people a day. President Trump's family is getting into the mobile phone business with Trump Mobile. The service will use network capabilities from all 3 major U.S. carriers. The new venture, unveiled by the president's sons, also launched a golden phone costing about $500, which they claim is made in the U.S. The family's entry into the mobile phone business could escalate concerns about conflicts of interest. Shery.
Paul, we're seeing some downside in European futures early in the Asia session. Of course, we saw the reversal in sentiment, especially with U.S. futures as well, after we heard from President Trump saying that Tehran should be evacuated. He's left the G7 early because of the Middle East crisis, and you can see right there, Stocks 50 futures down 0.7%. And this, of course, after we saw European stocks gaining in the overnight session. We have seen some calm return to the markets globally on expectations that the conflict in the Middle East would be contained. This is Bloomberg.
Got some breaking news out of Singapore. Non-domestic oil exports for the month of May. Big miss here, a contraction of 3.5%. We were expecting a deceleration. The expectation was 7.8%. That would have been a slowing from the 12.4% expansion that we saw the month prior. But instead, a shock contraction here of 3.5%. We have seen, of course, trade slowing across all of Singapore's major trading partners, China, South Korea, Vietnam, Taiwan, and perhaps more cooling could be expected as well as heavier U.S. tariffs kick in, not to mention the somewhat tense geopolitical environment at the moment. So there you see, just to recap for you, a shock contraction in non-domestic oil or non-oil domestic exports in Singapore of 3.5%. Shery.
We're getting some latest lines when it comes to the conflict between Israel and Iran. The Israel Defense Forces now saying that they've identified missiles from Iran coming towards Israel, that their defensive systems are operating to intercept the threat. In the meantime, we're also hearing from the Defense Secretary in the U.S. talking about the ongoing conflict in a Fox interview, saying that the U.S. remains vigilant and prepared. Of course, we have heard from the White House that the president is returning to Washington on Monday evening due to the crisis in the Middle East. This coming after Trump called for an evacuation of Tehran and called on Iran to de-escalate the conflict with Israel.
I gave Iran 60 days, and they said no. And the 61st, you saw what happened. Day 61. So I'm in constant touch. And as I've been saying, I think a deal will be signed, or something will happen, but a deal will be signed. And I think Iran is foolish not to sign one.
Let's bring in Nick Wadhams, who leads our national security coverage. Nick, of course, we continue to see the escalating of tensions between Israel and Iran. The IDF now saying that they are actually seeing some missiles incoming from Iran. The fact that President Trump left the G7 summit early, could we get a sense of an ominous signal coming from U.S. involvement in the Middle East, or is this just a part of his schedule in order to attend to these meetings?
Right. I mean, that's what we're really trying to sort through. One important thing to note is he hasn't actually left yet, so he is sticking around for the family photo with other G7 leaders that it's expected to take place any minute now, and he is also staying for dinner. So while he did feel that he needed or wanted to leave the summit early, he did not have such a sense of urgency that he helicoptered back from the mountain resort where he's staying and get immediately on the plane. So he is spending a few more hours here before he goes. There are several conflicting things to sort through. One is a social media post he gave an hour or two ago where he said Tehran, a city of about 9 million people, should evacuate entirely. So that got a lot of folks on edge, thinking that there may be some U.S. involvement. However, U.S. defense officials say the U.S. remains on a defensive posture. And you also had the French President Emmanuel Macron saying that Trump told other G7 leaders that he was thinking of a potential negotiation with Iran. So it looks like the president is still holding out some hope of conversations with Iran. So obviously tensions remain extremely high, and there's a lot of concern that the U.S. might get involved, but a lot of information to sort through here.
Just interrupt you briefly there. We are getting some live pictures from Canada. It is the G7 family photo. They kept us waiting for a little bit, but all of the leaders are there. There you see President Trump next to Keir Starmer, and also the host of this meeting, Canada's Mark Carney. So the G7 leaders just lining up there for that family photo. And as you mentioned there, President Trump has signaled an intention to at least stay for the leaders' dinner before heading back to Washington, D.C. What are the options here for Iran, though? Because they are running out, and the regime has signaled a willingness to de-escalate tensions. Could we see that happen?
You know, this, again, a big question. So there's been a lot of reporting today that Iran does want to de-escalate. You've seen its air defenses essentially neutralized. Israel has inflicted severe damage on Iran's nuclear program and some of the nuclear sites that it had built up over the years. So there is some reporting that it does want to de-escalate. However, at the same time as we're reporting, Iran is continuing with missile strikes against Israel, so it's not immediately backing down. The question is whether that's a sort of a negotiating tactic. So, you know, Iran, I think, could go either way. You had the foreign minister today also saying that it's never taken negotiation off the table, so leaving the door open to further talks with the U.S. But on the other side, you have Israel, which has said very clearly, Prime Minister Netanyahu said today very clearly that Israel has goals about dismantling the Iranian nuclear program and achieving other objectives, and it's going to keep that up until it believes its goals have been met.
Yeah, Nick, we have seen now that family photo at the G7 finish. We are expecting President Trump to speak there. He actually was standing there speaking to President Emmanuel Macron, not to mention, of course, Mark Carney, the host of the G7. What are we expecting to come out of this summit when it comes to the Iran-Israel conflict? Because we know that a joint communique perhaps is too much, but are we going to get some sort of statement?
Well, no. I mean, that's another issue here. So this, I think, would be the third time. Twice in his first term, President Trump left major international summits. The last time the G7 was in Canada in 2018, and then in 2019 he left a NATO summit early. So this is in keeping with a pattern he's shown in the past. And tomorrow's events at this summit were going to be chiefly related to Ukraine and the G7 showing support for Ukraine. Of course, President Trump largely disagrees with the rest of the G7 on what to do about Ukraine. So there were some meetings that he wasn't necessarily going to be looking forward to tomorrow. And the U.S. was also, according to our reporting, essentially blocking a G7 statement that called for de-escalation in Iran. So, you know, amid these tensions with Iran, there is also a suspicion among some of the folks we've been speaking to that there just wasn't a lot in it for President Trump tomorrow. And when it came to Iran, when it came to deliverables from this meeting, he got what he wanted. He got progress on a trade agreement with the United Kingdom. But otherwise, he may not have felt that there was much to be gained by sticking around for an extra day.
Yeah, Nick Wadhams, who leads our national security coverage, as we just heard from President Trump, that he needs to get back to D.C. as soon as he can, and Mark Carney agreeing that he fully understands why President Trump is leaving early. But take a look at Japanese assets, because we saw some conversations happen at the G7, and that included a 30-minute discussion between President Trump and Prime Minister Ishiba that not necessarily ended on any trade agreement being announced. And take a look at the Japanese market right now, where we're seeing the Nikkei, though, rebounding slightly up 0.3% after earlier losses, and the Japanese yen holding steady, that 145 level, very close at the moment, ahead of that BOJ policy decision. Bloomberg Economics now saying that the BOJ is signaling a cautious approach to defining its long-term bond holdings. Senior Japan economist Taro Kimura joins us now. Taro, and the reason that we're talking about bond holdings, because in today's meeting, the rate unanimously by economists expected to stay steady, but it's really the volatility in the JGB yield market that people are watching.
Right, exactly. So the focus is the Bank of Japan's tapering plan, and they're expected to reduce their cutting pace of JGB purchases. Although in a bigger picture, new purchases not very important anymore. What matters is the redemption, because back in the QQE period, when Kuroda's period, they purchased a lot of JGBs back in 2013 or 14 or 15. It's now time for those JGBs to be at the redemption. So therefore, in a bigger picture, the running of the balance sheet, BOJ going to the exits, is different. But as you mentioned, the recent spikes in long-term yields, probably I see it's more about the technical and Japan unique factors that created some small jolt few weeks ago. But probably BOJ is paying extra attention to it.
What sort of signals might we expect regarding the timing of the next rate increase?
Actually, I really focus on the rate part of the Ueda's communication, the press conference. The simple reason is because the inflation in Japan is becoming sizzling hot. All the latest reports, the CPI reports, most of the time overshoots markets' expectations, and it appears that also surprised the BOJ. And the inflation is running in a way that the BOJ have long wanted. It was buoyed by the solid wage growth. Service prices are picking up, and also the frozen items such as the rents and public services also picking up, and also the Israel and Iran tension. Set aside the human tragedy, the Japan's economy is hugely relying on the oil imports from Middle East. Don't forget, the Yom Kippur War, Iranian Revolution. It created a huge jolt in history in Japan because of the high inflation. So therefore, absolutely, the BOJ and Ueda is on guard up against the increased risks of inflation overshooting. So watch out for the rate signals from Ueda.
And at the same time, of course, we have on the other side of the coin the fact that we saw a sluggish first quarter here in Japan, actually a contraction, and no trade deal so far out of the G7. So What are we expecting? How are we expecting the BOJ to set up policy going forward, given, of course, the sluggishness of the economy on the other hand?
Exactly. So I think Ueda will pay his caution on both sides, the tariff risks and also inflation risks, but probably, still the rates are 0.5% and inflation rate is above 3%, 3.5%. So it's, in real terms, it's really negative. It's not a crisis. It's not yet a crisis. So I think the BOJ policy board is more concerned about the recent policy rate, which is too low in their perspective, is probably creating some financial imbalances or some something not productive for Japan's economy overall. So they're keen to increase rates, although they're still paying attention to what's going to come out from the tariff deals.
Taro Kimura, Bloomberg senior Japan economist, of course, as we are now looking ahead to that Bank of Japan policy decision later today. This is Bloomberg.
President Trump is cutting short his visit to the G7 leaders summit due to the escalating crisis in the Middle East. And this means he's going to miss a number of scheduled meetings with world leaders, including one with the Australian Prime Minister Anthony Albanese. Albanese earlier said tariffs and the Pentagon's recent review on the AUKUS Pact would be top of the agenda in his discussion with his US counterpart. So for more, let's get to April Palmerlee. She's CEO of the AmCham Australia. April, thanks so much for joining us today. This meeting that we were anticipating, now not going to happen. Is it safe to say, while getting trade ironed out for Australia is a priority, does it even crack the top 10 for the US at the moment? And how does Australia move things forward?
I don't think it's necessarily a bad thing. It was good that the president agreed to meet with the prime minister when they had the time, but it was unlikely there was going to be much movement on the tariffs anyway. We haven't seen any exemptions heretofore, so I don't think that was going to happen. The AUKUS review was just announced, so there's nothing to discuss there really, and I think this can be put off in favor of some more pressing matters. Nobody's going to argue that the actions in the Middle East are more important than what's happening right now in Australia. So staying down at periscope depth is okay for Australia for now. Another opportunity will arise, possibly around the Quad leaders in India next month.
The US, Australia does run a trade surplus with the US. It's one of the few countries to do so, but the United States has expressed some unhappiness with some of Australia's biosecurity measures, particularly around beef. But is this something that Australia should compromise on, and can it compromise on it, considering the domestic political environment?
Well, you're exactly right, Paul. We've had a trade surplus with the United States since 1952, a huge one. It's one of the biggest in the world. I think we're number 3. So President Trump is quite happy about that since he just counts goods. The beef was negotiated in the free trade agreement, which is just celebrating its 20th anniversary. So in 2005, there was mad cow disease in the United States, and American beef was excluded from import into Australia. That's eradicated now. So since 2019, American beef has been allowed to come into Australia. The problem is that cattle move freely over the border from Mexico and Canada. So unless the Americans can ensure that the beef was born and bred in the United States and hadn't come across a border, that's what's excluded from coming into Australia. And that's what President Trump has hooked onto, saying that Australia hasn't allowed one American Big Mac into the country. I don't think that at this point there's an easy way for America to exclude that cattle that crosses over the borders from other parts of the continent. So the Prime Minister has rightly said that he's going to stand firm on that biosecurity measure. But I think in the future, with AI and other technological methods, there should be a way for us to move forward and allow American beef in.
April, of course, the trade uncertainty is great right now globally, but we also have to contend with perhaps that slowdown of the Chinese economy as well. When it comes to your members, what's the biggest concern on the ground in Australia?
Of course, the Chinese economy is a big concern for all companies. We have American and Australian companies in AmCham, and while we only export about 4% of our total goods to the United States, the ripple effects of the tariff situation with China could have a big impact here in Australia, not only in the iron ore sector, but other sectors as well. And China's moves around limiting exports of the critical minerals needed in batteries will affect companies in Australia as well. Now, America is and has for a long time been the biggest investor in Australia, and America is the biggest destination for Australian capital. It's about $1.4 trillion in each direction. So that relationship will remain strong, and the private sector investment that we see between the countries, I expect to continue, along with the jobs that brings.
I just want to cycle back to the AUKUS conversation. The UK Prime Minister Keir Starmer has been very much nothing to see here. When he took office, he conducted a review. Now there's a new government in the US. He feels it's entirely reasonable the US does the same. But when we consider the size of the investment in US shipbuilding, how do you see this aligning, really, with a lot of Trump's policies? It does seem to tick a lot of boxes, and if AUKUS were to be cancelled, what would replace it?
Shipbuilding is a big priority for President Trump. There's now a shipbuilding office inside the White House. There's somebody at the NSC who's in charge of shipbuilding. So he really wants to see us increase our shipbuilding capacity. We only produce about 1% of the ships in the world in the United States. Korea and Japan do about 33%, and China does the rest. So it's a big priority for President Trump. There's a great Australian company called Austal that operates in Alabama. They've built about a third of the ships in the U.S. Navy. So that's a good relationship there. Up until 2 or 3 weeks ago, Vice Admiral Meade said that he was getting very positive signs from the American officials that everything was on track. They get the picture of what we're doing in Australia, and they're very happy with the progress that we've made. Certainly, Secretary Hegseth was very welcoming when Deputy Prime Minister Marles went to Washington, D.C. with a check for 800 million Australian dollars as a down payment on the $3 billion that we're investing in the subs uplift. I don't see any reason to expect that AUKUS would be canceled because it's very much in America's strategic and economic interests. So I agree that this is normal course of events. If the president actually wanted to cancel it, we'd probably see some sort of a big announcement, an executive order, not a departmental review by the number 3 at the Pentagon. So I'm hopeful that we'll move ahead.
All right, April Palmerlee, CEO of AmCham Australia. Thanks so much for joining us. We do have more on Australia ahead every Tuesday, 10:40 a.m. If you're watching in Sydney, that's 8:40 a.m. in Hong Kong. Plus, you can tune in to the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify, or Bloomberg.com. This is Bloomberg. Hong Kong's New World Developments is under pressure to refinance an $11.2 billion debt, and the firm's financial distress is causing concern in Hong Kong as it could drag down home prices and impair banks' loan books if it defaults. Bloomberg Opinion's Shery is now asking if the developer's too big to fail, and joins us now from Hong Kong. So Shery, New World's debt woes are creating quite a bit of angst in Hong Kong just as the financial centre starts to regain its feet. So how important is New World to Hong Kong?
Barclays did an interest study comparing New World Development to China Evergrande Group, which Beijing chose not to bail out, even though it was the world's most indebted developer. And what Barclays concluded was that the New World is twice as important to Hong Kong as Evergrande was to China. And I'm just enumerating some statistics here. New World's assets account for 10% of Hong Kong's GDP, whereas Evergrande accounts for only 2% of China's GDP. New World's has 10% market share in property sales in Hong Kong, and Evergrande has only 3% property share in Hong Kong. And also, New World has a pretty sizable chunk of commercial real estate loans in Hong Kong. So in a sense, New World can be more important strategically to Hong Kong than Evergrande was to China.
And yet, what are the implications if New World collapses? Could we see that fallout spread to even the banking sector, for example?
bankers are certainly not very happy because New World accounts for 7.8% of commercial real estate loans in Hong Kong. And also, most of New World's loans are unsecured, which is quite dangerous if they decide to somehow default or if it's a refinancing deal doesn't go through. Having said that, I will argue that Hong Kong's smaller banks, the regional banks, they are fairly well capitalized and they can absorb the losses if New World, say, just decides to go bust and defaults on everything. But these banks, they're not going to be happy because that's going to wipe out a substantial part of their earnings.
Bloomberg's opinion columnist Shery Ren there. Great to have you with us. Do check out that opinion piece when it comes to, of course, New World and the Hong Kong economy. Take a look at how the Japanese yen is trading at the moment because we saw some weakness in the overnight session after those gains and that spike that we saw on Israel's attack on Iran last week. A really interesting move when it comes to the Japanese yen because it tends to really spike after geopolitical tensions and then weaken subsequently. And we're seeing now that a downside of 0.2%, similar to what we saw when Russia invaded Ukraine. But of course, the big news today, of course, is what's happening with the Bank of Japan, widely expected to hold the rate steady, but we'll be watching their review of their JGB tapering schedule. Take a look at how U.S. futures are trading down 0.4% on that geopolitical tension, of course, increasing around Iran. We have heard President Trump telling Tehran to evacuate, Paul.
Yeah, let's take a look at how futures for the rest of the region are tracking at the moment. We've got the open in, of course, Hong Kong and China, just a little more than 30 minutes away. A little bit of positivity for Taiwan futures, better by about 2/3% at the moment. Hang Seng futures pointing higher as well. One thing we are watching closely is the Hong Kong dollar. It's getting pretty close to the weak end of the band today, so the level to watch around that 7.85 mark. There are a number of decimal places after that as well, so that's one to watch anyway. Chinese futures are kind of flat at the moment. Well, that is it from the Asia trade. Markets coverage does continue as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China show next. This is Bloomberg.